Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Lewis, and I'll be guiding you through the latest news and trends in the financial markets. Today, we're starting with a story that's been making waves in the Indian stock market. The Bombay Stock Exchange, or BSE, has been experiencing some volatility lately, but despite this, some experts are still bullish on the market's potential for growth. Dharmesh Shah, an expert from ICICI Direct, recently shared his insights on the current state of the market, and we'll be taking a closer look at what he had to say. According to Shah, the Indian market has been outperforming global markets over the past 2 weeks, with the headline indices holding steady despite some pain in the small-cap space. He believes that this trend is likely to continue, with large caps expected to outperform mid-caps in the near term. Shah also highlighted the banking sector as a top pick, citing the Bank Nifty's recent outperformance and predicting a target of around 60,000 to 60,500. In addition to banking, Shah sees value emerging in other sectors such as autos and IT. He notes that capital goods, which have lagged behind for some time, may finally be due for a catch-up move in Q2. Shah also shared some specific stock ideas, including Union Bank and Adani Port, which he believes have strong potential for growth. It's worth noting that while Shah's predictions are optimistic, the market is inherently unpredictable, and investors should always do their own research and consider multiple perspectives before making any decisions. We'll be keeping a close eye on these developments and bringing you more analysis and insights in future episodes. We'll also be exploring other topics, including the latest news from the world of finance and expert opinions on the market trends. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're diving into the world of dividend stocks, where investors are always on the lookout for reliable and attractive returns. Today, we're exploring two compelling stories that highlight the opportunities and considerations in this space. First, let's examine the case of Novo Nordisk, a company that has been making waves with its impressive dividend yield and consistent payout history. With a yield of around 2.5%, Novo Nordisk is certainly an attractive option for income-seeking investors. However, it's essential to consider the company's underlying financials and growth prospects to determine whether this dividend is sustainable in the long term. On the other hand, we have Tractor Supply, a retailer that has been quietly building a reputation as a dependable dividend payer. With 16 consecutive years of dividend increases, Tractor Supply has demonstrated its commitment to rewarding shareholders. The company's current yield of around 1.7% may not be the highest, but its conservative payout ratio and impressive growth prospects make it an intriguing option for investors seeking a balance between income and capital appreciation. As we weigh these two stories, it's crucial to remember that dividend investing is about more than just yields and payouts. It's about understanding the underlying business, its financial health, and its potential for long-term growth. By taking a nuanced approach and considering multiple factors, investors can make informed decisions that align with their investment goals and risk tolerance. Whether you're a seasoned investor or just starting to explore the world of dividend stocks, it's essential to stay informed and adapt to changing market conditions. As we continue to navigate the complexities of the investment landscape, one thing is clear: a well-crafted dividend strategy can be a powerful tool for generating returns and achieving financial success. Welcome back to the Riskwiser Zone. As we wrap up today's episode, let's take a closer look at some of the latest developments in the Indian economy and their potential impact on investors. Karthik Raj Lakshmanan from UTI AMC recently shared his insights on the new labor laws and their effects on businesses. According to Lakshmanan, these reforms are a step in the right direction as long as they strike a balance between being pro-business and ensuring labor security. Lakshmanan also highlighted the importance of manufacturing as a structural theme, with India positioning itself more firmly in global supply chains. He emphasized that his approach remains fundamentally bottom-up, with exposure to various sectors such as pharma, chemicals, EMS, and autos. However, he cautioned that a sharp correction in the US could still have a spillover effect on other markets, including India. In terms of sectoral opportunities, Lakshmanan suggested that investors should be selective and steer clear of pockets where optimism has run ahead of fundamentals. He specifically mentioned FMCG and power utilities as sectors that are losing their sheen due to structural slowdowns and high valuations. As we consider these insights, it's essential to remember that investing always involves a degree of risk. While the Indian economy may be poised for growth, it's crucial to approach the market with caution and carefully evaluate the potential risks and rewards. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe, and until next time, keep your finances in check.